Hey everyone, and welcome to this quick tip about UGAZ brought to you by Risk Premium Media. I'm your host Charles, and I'm going to tell you about the biggest mistake people make when trading UGAZ. But first, please touch the like button if you want to hear about this mistake, because that lets me know that you're interested in this topic. Also, subscribe to this channel and hit the notification bell so that you don't miss any of the tips I'll talk about in the future. Let's get right into it. I call this problem the 3x mistake, because it has to do with the fact that most people don't understand how UGAZ works, in spite of billing itself as a 3 times long natural gas ETN. People still don't understand what that means. ETN means exchange traded note, as you can see here on ETF.com. So people think what this means is that whatever happens to the price of natural gas, that's going to happen times 3 to UGAZ. That's not true for reasons big and small. Here's one. See how it says the note promises to provide 3x exposure to its reference index, the S&P GSCI Natural Gas Excess Return Index, for a 1-day holding period. This is really important, okay? UGAZ returns 3x the S&P Natural Gas Excess Return on a daily basis. In other words, a 1% gain in the S&P Natural Gas Excess Return Index translates to a 3% gain that same day in UGAZ. But here's where it gets tricky. If a 1% gain in the natural gas index translates to a 3% gain in UGAZ, then logically we can say that, for example, over 10 days, a 10% gain in the S&P Natural Gas Excess Return Index translates to a 30% gain in UGAZ, right? Wrong. The truth is, over many days, the change in UGAZ can be drastically different from the change in the underlying natural gas index, and not in a predictable way. That's what makes this mistake so dangerous. Let me show you why this is. Let's hop over to the website of the Standard & Poor's company. This is what puts together the index. Okay, here it is. If we click on Export right here, we can actually download the historical data for the index. Now, I've got it here already downloaded. These columns on the left are provided by S&P in the file, and over here I've made some adjustments, some calculations that I'll walk through with you. First, what are we looking at on the left here? S&P has provided the daily values for their natural gas indices. There's the regular index here on the right, okay? There's the total return index on the left, TR, and there's the excess return, ER for short, in the middle. Remember that UGAZ is based on the excess return index. I'm going to save the distinction between these 3 indices for a different video, but just know right now that UGAZ provides 3x the daily return of the S&P Natural Gas Excess Return Index. Now, how do we figure out daily returns and 3x daily returns? Well, it's simple. Okay, the daily return is the percentage change in the index from one day to the next. So for example, here on December 17th, the index was 7.39, down from 7.46 the day before. That's a negative 0.94% change. And we can get that by taking the value on the day in question, dividing it by the value from the day before, and then subtracting 1 from the result. So in this column, I've got all of those daily returns for the index. And then in this column, I've multiplied those returns by 3. Now, UGAZ is supposed to return 3x the return on the daily basis, and in fact, it doesn't even do that for reasons of fees and other reasons that I'm not going to get into. That's not even the big problem that I'm talking about here. The big problem I'm getting at is that even if we do assume UGAZ returns exactly 3 times the return of the index on a daily basis, over longer periods than 1 day, the difference accumulates and becomes much different from 3x, and not in a predictable way. For example, we can compare the difference in total returns over the past month. If we had put $100 in the index directly, it would have declined to $86.33, a decline of 13.67%. We get that by taking the daily returns on our $100 and calculating the new value every day. So it goes down 0.94% on the first day, giving us $99.06, then down another 1.76%, giving us $97.32, all the way down to $87.33 over the course of a month. Now, as for UGAZ, our $100 first declines by 2.82%. That's 3 times 0.94. So it becomes $97.18. And the process is repeated all the way down to $62.51. Notice that that's a total decline of 37.49%, which is not 3 times 13.67. That 3 times 13.67 would have been 41.02%. That difference might not seem much compared to 37.49, but it can get much worse over time. So let me show you how. Let's take a longer time horizon of 60 trading days, and let's just assume the index goes up 5% one day and down 5% the next day over and over again. So it's just bouncing around, hypothetically speaking. Well, what happens after 60 trading days? The index has declined by almost $7. It's down 7.23%. But UGAZ has been bouncing around 15% every day up and down, and now after 60 days, it's down a whopping 49.48%. That's not 3x the return. That's not even 6x the return. That's 7x the return. Can you imagine if you put $1,000 in UGAZ under the assumption that if the index went down 7%, UGAZ would go down by 3 times that, or 21%? You'd be prepared for a 210 loss on the position, but you'd be in for a rude awakening when your actual loss was almost $450. Now you should understand, the biggest mistake that UGAZ traders make is holding UGAZ and expecting it to perform like natural gas times 3 over the long term. That's not what it's going to do. And there's no way to tell how different it's going to be. Without knowing exactly what the index is going to do every day, you'll have no idea how UGAZ is going to compare over the long term. And you're going to get it dead wrong. The lesson here is that UGAZ is strictly for day trading. The same goes for DGAZ. Really, this applies to any leveraged exchange traded note or fund. It's for day trading, not swing trading, and certainly not for long-term investing. That's a huge mistake. Have you ever held a leveraged ETN or ETF for a long period, like a month or more? And have you been dissatisfied with the results? If so, you may have fallen victim to this mistake. Let me know about your personal trading experiences in the comments below, and let me know if you've learned a valuable lesson. Now stay tuned, subscribe to this channel for more useful trading videos. That's all for now, and happy trading.